SCHD is bleeding. As you can see, it has a current price of $74.67, and it's down 1.02% year to date. And I know what you're thinking. That's not a very high number. Being down 1%, that's fine. But let's put these numbers into context. Last year, SCHD was down 3.23%, which once again, it's not a high number, right? But that's two consecutive years of negative growth. And I think that's significant. If you had 2 years of negative performance at your job, sure your boss wouldn't be happy, especially when you compare it to the S&P 500, which is currently up 18.09% year to date. And I know what you're thinking too. Well, the S&P 500 was down almost 20% last year. That's true. However, if we look at the portfolio visualizer, the back test, if we start with $1 million in SCHD and the S&P 500 at the end of 2011, or basically the beginning of 2012, you can see that the S&P 500 has significantly outperformed SCHD. And if we had looked at this chart a year ago, you would see that SCHD was outperforming the S&P 500. But just look at this chart. After 10 years, the S&P 500 ended almost $4.5 million up, as SCHD is 4,048,000. So the S&P 500 outperformed SCHD by $400,000. It's crazy what can happen in just 8, 9 months. Because I know I created a video around that time where SCHD was killing it and they were destroying the S&P 500. But despite the fact that SCHD is not performing very well and is being destroyed by the S&P 500, there are some reasons why I'm still going to throw all of my money into SCHD. But first, let's actually look at my portfolio. It's currently at $52,472.98. Year to date, I'm actually down $498.41, and I've earned $1,235 in dividends for a total return of 1.45%. Now you can see SCHD right here is a significant portion of my portfolio. It's currently at $15,640.05, and that makes up 29.8% of my portfolio. And I actually own 209.45 shares at an average price of $73.32. And looking at the price, I'm actually up on SCHD stock. And let's not forget another great thing about SCHD. They do have a 0.06% expense ratio, which is very low. And they have an amazing dividend yield at 3.48%. Well, maybe not amazing, but that's a really good yield, especially for SCHD. And their dividend growth for sure is amazing, anywhere from 12 to 15% year over year. And if we go over to my activity feed and just search my buys, you can see $30 SCHD, $25 SCHD. Even when I'm putting 60, it's SCHD. So pretty much everything is SCHD. And I see a big buy over here, $149 SCHD. So as you can see, despite the underperformance by SCHD, I am still putting all of my money into this stock because of how much I believe in it. And I'm going to go over to some of the rules of SCHD, why I prefer this ETF and to put my money into it. So the title is SCHD rules. You could take that two ways. These are the rules of SCHD, or just in general, SCHD rules. Either one works. So SCHD requires at least 10 consecutive years of dividend payments. They require a minimum of a $500 million market cap, and they require the best combination of cash flow to total debt, return on equity, and dividend yield and 5-year dividend growth rate. And I believe this is what makes SCHD such a popular ETF, are those three rules. And I'm going to scroll down and just show you one last thing on the portfolio visualizer. So if you started with $1 million at the beginning of 2012, you would have made $31,273 from SCHD and $24,887 from the S&P 500. And then 10 years later, the S&P 500 would have brought you $63,193, and SCHD would have brought over double that at $133,778. And we still have quite a bit to go in the year. And remember, with SCHD's 12 to 15% dividend growth rate, that 133,000 is going to shoot up. And so SCHD will provide you a lot more income. Another thing I love about SCHD and why I'm going to continue buying the stock is because you don't have to actually sell your shares to make income for the year. You can just sit back, relax, collect the dividends, and know that even if the market goes down, you're still going to get that 12 to 15% dividend growth rate, which at this point in time will now be over inflation.